Right. Okay, good. You guys ready for part two?
Ready? Yep.
Good. How the mic sound? Does the mic sound good? Okay, good. All right, great, man. We got an exciting panel coming up for you guys right now. Hope you guys ate. We're trying to wake back up some new information to change your situation.
I'm gonna go up first.
Right?
Introduce you. Right?
Who's ready for information to change their situation? Just wave at me. Come on, wave at me. Come on. There we go.
Huh?
All right. So I want to bring up my brother, the one and the only. My man Bishop, come on to the stage. Clap it up. Come on, clap it up, clap it up, clap it up, clap it up. Let's go. Let's get it.
Y'all need y'all to turn up, man. This is Boston right here. Get up. Y'all need y'all to get up, man. We in Boston, right? What a song. Like 5 seconds, that's it. Yeah. I know we just ate and all that, you know what I'm saying? Boston, what up? I said, Boston, what up? So I'm a fellow New Yorker, so this is kind of like the ops real quick. But you know what I'm saying? I feel the love. So listen, welcome to Convos with Bishop Live. We have an amazing person we're gonna be able to talk. We're gonna talk wealth building. We're gonna talk real estate. We're gonna talk networking. Everything that you need to be able to actually build wealth. That sounds good? Yes. All right, perfect. So onto the stage, I'm going to introduce. We good? Oh, thank you. Appreciate it. What is this? Oh, I don't need this. No, we're good. Come on, dog. Damn, hands to you. So this man has well over a decade of experience when it comes to wealth building, when it comes to real estate. He's worked for Merrill Lynch, UBS. What else we got? Fargo, everywhere. Listen, man, I want to introduce my guy, Mr. Rob Natale. We're supposed to have music, but it's okay. My man, how are you, man? Yeah, we need a mic. Can we get another mic by any chance? All right, man. How you feeling, Rob?
We're doing good. Good to see everybody. Hope you had a great lunch. And like I said, getting ready for a good second half of the day.
Yes, sir, man. So listen, man, if you can definitely give just a little bit of background on you, your starters and everything else too, and then we'll get started.
Yeah, so I grew up about 30 minutes south of here in a town called Sharon. I've been now calling the North End home for 12 plus years, so right down the street. My work experience really coming out of college has always been in the financial services industry. So I was working first at a custodial bank, really doing fund accounting work. Very heavy data entry, very much a square peg in a round hole. It's not what I was supposed to be doing. And from there, I transitioned eventually over to the asset management space, working at a company called Columbia Threadneedle Investment. And that's where I was working for a number of years with financial advisors at Morgan Stanley, Merrill Lynch, UBS, Wells Fargo, like Bishop was talking about. And my job was to educate and sell some of our different investment products, mutual funds, exchange traded funds, 529 education programs. And for me, it got to the point where I noticed, and again, if anyone here has family who are financial advisors, there are good financial advisors out there. 100%. I just want to make sure we're clear on that front. However, for me, I worked enough on the day-to-day where I was seeing a pretty consistent trend and theme where not operating as true fiduciaries, not operating truly in the best interests of their clients. And it got to the point where I said, I do not want to be in this industry anymore. Just the moral compass did not align. But I did learn, which we're going to get to talking with Bishop, that some of these teams that were managing these ultra high net worth individuals were utilizing strategies a lot in real estate that it felt very much to me like the good old boys club. Candidly, these strategies being kept behind closed doors, not being educated to the general population. And I thought about, thinking about maybe starting a company where I can kind of bridge that gap. I mentally was not ready to go out alone at that time. I just mentally wasn't there. So I give you kudos to all of you for coming today, which we'll talk about, to starting to get into that mindset to maybe go and get entrepreneurial. I got into residential real estate, residential mortgages, and that eventually, though, led me to start my company back in 2022. I was mentally ready to go, and the company is named, the company's called North Square Capital, where what we do, we're a real estate investment firm, we're based in Boston, and we work a lot predominantly with medical professionals, entrepreneurs who are looking to get exposure to real estate investment opportunities that are not being educated to the masses without, as Trevor talked about, we're not trading your time for money. You can start making passive income outside of your day-to-day operation and building assets, like Trevor talked about before.
So, got a quick question for you. So, what do you think that you can actually do, or what your company is doing, that is way different than anybody else when it comes to investing, when it comes to portfolios and such?
Yeah, so I'll be the first even to tell you, right? What I'm doing, there are other companies out there that will offer and do something very similar that you can find. I'd say where we differentiate and where we really truly hang our hat on is having that lens of being the financial services industry and working with advisors and getting a good sense of overall investment and portfolio construction. So for example, how many folks here have heard of the good 60-40 investment portfolio? I don't know if anyone's heard of that, right? That is a very archaic strategy to invest in. Bonds are very heavily correlated to the stock market. If you look at that portfolio, when we say heavily correlated, they're very much moving more often than not in the same direction, okay? We take the vision, having that insight and thinking about, let's look at what the biggest pension plans in the world are doing, like CalPERS, California's New York State City pension plan. How is their portfolios constructed? Stocks, fixed income, but a lot in alternative investments. One of those such being like real estate or investing in businesses. So we have that knowledge and expertise, bring that from our experience into this world and coming at it with a true fiduciary lens. From a study and educational standpoint, that's something that I went to go obtain, is something called the AAFA, which stands for the Accredited Investment Fiduciary Analyst designation. Because at the end of the day, my moral compass, my North Star is my clients and making sure I'm doing right by them. Because I candidly, like some people, I would just feel really bad about losing folks' money and just doing wrong by my clients. It's all about my clients.
So guys, let me ask you a question. So when you guys think about real estate investing, what's the first thing you think about? Money. Other than that? Like properties, right? Yeah. Okay, that's literally what comes to mind. So in your standpoint, other than that, like, what do you think people are missing outside of buying properties when it comes to real estate investing?
So, good question. You can invest, buy properties, what have you. The other paradigm or something to think about is, what if you could be the lender and be the bank? All right? So Trevor even kind of talked about that a little bit too, and accessing credit and taking advantage of that. And let me give an example. Everyone here has a bank they work with. I don't know, you put, let's say you put your money, you have a savings account there. You're getting not 0.5%, right? By the end of the year, can that even, right? Can I even buy you a sandwich? Like, you know what I mean? Like the banks, they take that money and they'll lend it out, right? Credit cards, where they charge credit cards, 20%. What are they doing on personal loans? 12 to 14%. What are they doing on mortgages? 6%. They call it net interest margin. They're taking all that money and they're making so much money off of that. So what we do is we provide investment opportunity that gives folks the ability, when I say through the bank, we co-manage a fund that allows folks we pool together investors' capital. We're lending out that money out to professional fix and flippers down in the Carolinas, in Georgia. 6 to 9 month loans, average loan about $210,000. 14% is what we charge plus a couple of points. And then we're able to provide our investors somewhere between 6 to 10+% on their money, where they can either do monthly income, steady cash flow, they can do monthly compounding and let that stack up, as Warren Buffett says, compounding, the 8th wonder in the world. And it comes with a 90-day liquidity provision, giving folks access to their capital in a relatively short period of time. So that's what I mean by being the bank, right? We're pulling the capital, we're lending it out, but similar to a bank, if you get a mortgage, you buy a home, you don't pay your mortgage, they can take the property back, right? Our team, we don't look to default on anybody who's doing these fix and flip properties, but that's the collateral they're pledging is the home. We can take that back, and that's way how we mitigate in protecting our investors and their capital, as an example.
So you would say that everybody in this room right here is capable of actually being a lender, correct?
They are.
Yeah.
You could do it on your own,
Yeah.
or you can have others, like this is what one of the things our firm does, where we do the work, and then you get to experience the benefits.
So why do you think lending is often more of a predictable and scaling strategy as opposed to ownership?
Let me double check. Or is it trust?
Yeah, I'd say both can be true. I would say when you think about the predictability standpoint and more of a conservative approach, is that concept of one, being the bank, and two, what collateral is being pledged. So for example, when like we talked about a bank can take back a property if someone is getting foreclosed on, if you're lending out money, right? You're lending it out, they're pledging that asset where you can obtain that in case they don't perform. And as we know with real estate, that has stood the test of time. Right, that's actually one of the reasons why we named the company North Square Capital. Is in the North End, North Square is the oldest square in the country. It's been around since 1600s, and real estate is something that has always stood the test of time. So from a predictability standpoint, if you have an asset that you can use from a risk mitigation, and again, being the bank and getting consistent, steady type of income, is why I feel that fits into that quadrant.
Okay. This has been helpful so far, guys, right? Has it been? Okay, good. I can leave if you guys want to. No? Okay, perfect. Just want to make sure you guys good. That's it. All right. So, got a quick question for you. So, why hasn't this been widely available to everyday investors? Like, give us the tea on that.
Yeah, we could really go down the rabbit hole. But
So,
I'll give a couple of examples.
Charles,
for one, these type of investments more often than not are not available to be held when we call it advisor. So again, let's say your financial advisor works at, just say Merrill Lynch, okay? They have specific, it's very much geared towards the public markets.
Power, get in the room and stay in the room.
Stocks. They might not, and they say, hey, I want to invest in this. Can I do it?
Change their lives.
Well, if they can't hold that asset on their platform, they manage themselves, that affects how they get compensated. Okay? They get paid more often than not based off an asset under management fee. So if you have $1 million in assets managed with them, that's 10 grand they get on an annual basis. If they can't manage it for you, they're going to be very
You got to get started to be
apprehensive and hesitant to want to recommend a strategy that they can't manage and get paid on, even though it could be for the better interest of your overall financial health in the long run.
That's right.
So that's one reason is inherent conflicts of interest. Which is again one of the reasons why I left the industry.
Good. I like that.
I'd say, you go.
Yeah, so you basically leaving the industry and also going into North Square Capital.
Yeah.
Now we have both sides of the coin, right? We talk about investing, we talk about lending, ownership. So let's talk about your capital company and what exactly it actually solves as far as like why did you actually start that?
Yeah, I started it because I just saw this broken system, in my opinion. It's all about feeding the machine, going to a quote unquote just stockbroker, and again, they're putting you in a portfolio where some of the strategies too, they might be recommending you. They might get a higher compensation on those strategies as well that isn't necessarily discussed or that you know about. Is one major piece, and I saw this broken system, and I said I want to bridge the gap and I want to bring about these institutional like investment opportunities to folks like ourselves. So I work a lot with folks in medicine, particularly just due to my family's exposure in medicine and also a personal health situation. I went in 8th grade. I mean, I was diagnosed, and I can have a whole separate side conversation with chronic fatigue syndrome and the admiration and the help that those physicians did for me in that year, I really never forgot that. So for me, seeing all those pieces about why, like you said, why I wanted to start this and why I wanted to get into it was really, again, bringing about this everyday folks, educating, show, hey, there are investment opportunities that conventional we have out there that can help you build a long-term financial future that is going to be more advantageous than what you're currently doing, in my opinion.
So one of the things that I actually really appreciate about Rob is that he is, people galvanize to him. He's very out there. He can network like a mug. I mean, how we just literally just met, honestly, like almost. We met like a week ago, actually.
Yeah, a week ago.
Yeah, you know what I'm saying? Yeah, we're not really, it seems like we're best friends or whatever, but that's actually the one piece I really want to highlight with him is that the power of networking and how he can actually really reconnect. Because I really believe that, do you guys believe that the rooms you choose define the results that you get, correct? Yes? So let's talk about the power of networking. Let's talk about just being able to connect and everything. Like, how important is networking to you when it comes to not only you, like your personal brand, but also your business?
And then we're gonna go.
Yeah, so for me, if I didn't get in the right rooms and network and build the right relationships, I would never have even started on my own and went the entrepreneur route. So that's why I said before, it's kudos to you guys for coming and spending a Saturday getting linked up with Brendan and the Podcast to Cash tour to start learning and putting these into place, these tools and these mindsets, because I myself did not come from an entrepreneurial background. My mom was a teacher, my dad sold insurance. No one in my family has come through that road. So if I told you 4 years ago I'd be doing what I'm doing now, I would say there's literally 0% chance that would be happening. When I tell you 0, I mean 0. So by getting in the right rooms, coaches, mentors, how important that is, cannot be understated. Because if you're even hanging around and talking with the same people who aren't doing what you're doing where you want to go, it's going to be very challenging, very hard. So that's for me what the power of the networking and coaching has meant for me.
Look who calling.
So I'm gonna take this to a deeper level for you guys, right?
Les
So
Brown, how's it going, man?
Information is actually used when
Man,
it comes to
it's a
networking.
pleasure
Sounds
to see
good? Sounds good? Perfect. All right, so look, when you want to be a master networker, you have to be able to see how you can actually provide value to somebody else, right? So the acronym that I use to try to basically connect to somebody and to be of that invaluable asset is TMA, not TMI, TMA. So T is for time. What can you, because time is finite, right? It's the most valuable thing that we have, correct? How can you actually give somebody either more time with the services you have, cut less time, whatever it is, see how you can actually serve that person as far as saving them time. The next one is money. How much money can you make this person that you want to be able to connect with? We're going to be doing business, in the later future. So, okay, maybe I can definitely, give Rob an opportunity as far as maybe giving him another client as far as investing. Maybe I can definitely, try to give him more revenue. And then the last one is A, and A is for attention. At the end of the day, a lot of people, I'll say maybe most people, really care about the type of attention that they actually want, especially when it comes to building their personal brand. So for me, that's literally the way that I'm able to really give value to people, which is TMA. Make sense?
Yeah.
Perfect. All right, so I don't know how much time we have to, go ahead.
Before you transition, one
Yes.
thing around that great book that's echoing a lot of what Bishop just said. It's a book called Never Eat Alone by Keith Ferrazzi. I heard a yacht. Oh, right on. All right, so you know what I'm talking about. And the whole idea is when you're going to networking, some of you folks are having conversations with others here today. It's not about just, hey, let's just collect business cards, right, and call it a day. It's really about getting to know how can, Bishop said, provide value to one another. That's how we all win in the long run. Both personal relationships, professional relationships, and the importance of that. Because if you're going in though with me attitude, A, people are gonna pick up on that real quick. 2, that's not gonna lead to long-term success. So I just want to add that book, Never Eat Alone by Keith Ferrazzi.
Yeah, and also another speed up too is that if you guys want to be able to provide value to somebody, say for instance you want to connect with, who's somebody who you look up to that like you want to be with, that you want to be like?
That I want to be.
Yes, just give me like an entrepreneur, give me a what?
Doesn't matter if it's a man.
Doesn't matter, man, woman, whatever it is. Let's say, yeah.
Thomas.
Okay, Eric Thomas, right? If you want to be able to connect to that person, right? The last thing that y'all can do is literally say, hey, Eric Thomas, how can I provide value to you? Literally anybody who asks me that, like, I'm just never gonna necessarily talk to them again. What you can do is, because you've been following this person for a very long time, see how you can actually provide value for them as far as like reverse engineering and doing the work beforehand. After you do the work beforehand, then you present that to Eric. So let's just say, what do you do for a living?
I do insurance.
Okay, let's just say that hypothetically he is looking for an insurance policy, right? You run it into Eric Thomas. Hey, Eric, just want to let you know, I have this insurance policy or this insurance company. I have a whole entire deck as far as annuities and everything already prepared for you. Let's have a conversation. I think this is the way I can actually provide value for it. Other than trying to guess as far as like him doing the work. You already did the work already, then you present that to him. I guarantee you it's going to be a faster process.
Yeah.
Love it. Thank
So,
you, Bishop.
no worries. I'm not going to get clapped, nothing at all.
I'll give you a clap. You're clapping me,
Okay, now I feel up. There we go. All right, back to the podcast. I'm joking. All right, so the last thing I want to talk about is partnership.
Yeah.
Networking is great. Learning how to actually garner the skills to be able to run a business is great. But then also, I think what actually brings everything together is finding the right partner.
Yeah.
So talk to me about like your process as far as like finding the right partner, the right business partner, when to go in as far as like trying to like, save a partnership, when to walk away. Tell me your thoughts.
Yeah, so one piece I would say, I think folks jump too quick into a partnership. Number one, I've seen that quite a bit. And I would advise that spend more time to get to know the individual, and this ties into what I look for and what the importance is ethics, moral compass, character, anything around who the person is, because A, things are gonna happen in business that aren't gonna go well. And who's the individual that you're working with, right? If you don't have those, I don't want to work with you. I don't even want to, like, you're out, right? It's a very black and white for me, because all skills, that all can be taught, and you can build that relationship together, but you need to have those foundational pieces. Otherwise, long run, it's not going to work. It's not, and it's not going to be good for anybody involved.
Yeah, no, definitely. No, that was great. All right, so we're going to have one more thing, and then we're going to go some Q&As. I believe you have a gift. Well, we both have a gift for you guys, actually, but you want to go for your gift first? Yeah,
so there's a couple free resources that I've put together that I'm happy to send to you all. So I'm on a couple different socials, I think for ease of use. If you go on Instagram, my name is Rob Natale _, so it's NATALE _. And there's two different resources, and if you comment,
DM,
right? As you know, I'm not too much on Instagram.
We're gonna get him there, don't worry.
Yeah. So if you DM just capital, there's two different pieces I'll send. One is an article I wrote that I put together on LinkedIn. It talks about the 15 questions. While it's geared towards folks in medicine, the questions are universal. It's 15 questions that you should be asking a financial advisor to make sure that they're truly operating in your best interest. That's one. The second one is an educational guide that talks about, titles High Income, No Freedom, Real Estate Strategies that can help you win when you're not working. And it talks about the different ways too that you can invest in real estate in a truly passive manner, including the lender debt fund type structure that we talked about. So you send that, I'll make sure and just include your email. I'll get it sent over to you, and then happy to obviously answer any questions that you have off of that.
Also, if you guys pull out your phone right now and you follow me at Marvel, M-A-R-V as a Victor, E-L Bishop, and you comment the, I said the comment.
Oh, there it is.
If you DM the word, DM the word capital to me. Gotta follow both of us, by the way. I'll give you guys free of charge. It will be a millionaire mindset ebook that you'll be able to incorporate. Yeah, at Marvel Bishop. Marvel, M-A-R-V-E-L, Bishop. Follow him and Rob Natale. And then, DM the word capital. Then I'll send you guys that ebook, that free resource as well. Okay, so we're going to get a couple questions. Anybody that has any questions whatsoever for Rob, we'll get a couple and then we'll wrap up.
Yeah, and if you folks, because I know some can be a little bit more apprehensive to ask questions in front of the audience. If you do have questions, feel free. Obviously, you can ping me on the side because I'll be here, and then also through one of the socials. But there's no dumb questions. This is an open canvas.
Let's get a couple questions. Well, not you. Wait, hold on. Both you and.
Oh, here we go.
Okay, there we go. Right there. Yes, sir. Go ahead.
How's it going?
Good.
What's up, my man?
Thanks, Rob, for your insight. Where do you see the real estate market shifting? You know, you said you opened your business in 22, like post-COVID. Are you seeing more like commercial type, less residential,
And then you
data
bring
centers?
and then you do it for
So that's we can go down a very long chat. We can have a side chat about the two. There's so many different pieces that you can do investing in real estate. You can do, like you said, data centers. You can invest in hotels. You can invest in self-storage. You can invest in mobile home parks. You can invest in a short-term rental portfolio. They all have their own unique strengths, and they all have their own drawbacks to that, right? And again, you can invest in all these strategies I just mentioned as a truly passive hands-off investor. Hands-off, but you get to experience the benefit and wealth creation of real estate. So where I see it, I think it depends, I mean, that is like a very, there's so many different ways I can go with it. So data centers right now, for example, are very hot because of AI, as an example, and the need for data centers in this rapid expansion of that space. Now, multifamily is an example. When I talk about multifamily, it's 100+ unit apartment buildings. Depends then on the market. The past few years, some markets, like Austin, Texas, and Phoenix, Arizona, have had a tremendous amount of oversupply. And so people who invested in those type of investments have gotten hit because they weren't able to increase rents. There's higher amounts of vacancy. Or then some other markets, let's say if you look in the Indianapolis area, some parts of the Midwest, have done exceptionally well. So as far as where do I see it going, folks that keep talking about a rate cut with the Fed, the Federal Reserve, there's a new chair coming in May. They're talking about first two, then one. I don't think it's happening at all this year because now what's going on in the Middle East, we're going to be having, I think, an increase in inflation. We're talking about potentially spending $200 billion+ down towards the war. So as far as where I see it going is individuals and whatever investment we look to do is make sure that the debt is properly structured. Because if it's not, that's where you can get hurt in the long run. We can chat much more about that. Sure, but I just want to give you just a few pieces.
One more question. Thank you. Anybody?
I have one.
Okay.
I just wanted to know if you could talk a little bit more about the investment piece being on the lender side, so where we could get passive income.
Yeah, like what the actual structure is on a high level? Yeah, so what we're doing is it's called a syndication model. Okay, you have limited partners, what we call LPs, and you have general partners, or GPs. What happens is limited partners, right, say everybody is pulling together capital, and then you're relying on the general partners to execute that business plan. So let's talk about the structure I was speaking to. My operating partners, okay, they are based in Columbia, South Carolina. So when we talk about what you look for in a partner, why I've worked with them for 2+ years, we are aligned on preservation of capital and not losing capital first, second, third for our investors, high moral compass, and ethics. So what we're doing is we're pooling capital, we're lending that money out to professional fix and flippers down in the Carolinas and Georgia. Underlying homes single family, 3-bed, 2-bath, about 1,500 square feet. And we're charging those fix and flippers about 14% plus a couple points. And then off of that, we're then providing our investors, depending on what tier they come in at, between 6 and 10+%. And they can do a monthly income where they get it every month. They can do the monthly compounding where they let it stack, because then 10 can turn to 12 to 14. And then if something comes up where they need access to their capital, you have the ability to redeem part or all of that within a 90-day liquidity provision.
Man,
so that if you
I had moved to North Carolina for like 2 years. I like that better.
And get over the
Can't go on the
information
foot when I'm
to
putting
you.
it out.
And the whole idea is when I have that conversation though, to make sure that what this investment is doing is going to help solve one of your long-term goals and remove one of your
high school, college,
problems.
New Jersey.
That's the whole idea.
New Jersey gave me that get up and
Investment
you
is
know?
aligned with what you want to do.
Yeah. I need
That's just a question? I don't know if we have time for one more question. Maybe you guys can maybe chat a little later.
I was just gonna say in terms of Rob, so when you look at investments,
Yeah.
right, for people that, because you can invest in your own property and that
Yeah.
time, the sweat, all that.
Yeah.
Right? Or you invest in a syndicate.
Yeah.
But can you
It's
just
just
like,
everything.
in terms of what that
You gotta get
dollar
up and
amount, what
gotta be moving,
different
you know?
levels of investment.
Yeah, so folks, that's another good piece where you can start at, I think, lower levels than people think. So for us, we have different tiers.
Supermarket,
Right, so
pages,
25,000
everything is.
to 99,000 is 6%. It's a 6%.
Yeah.
100,000 to 500,000, 8% 500,000 is 9%, and a million